Hello, chart watchers, and welcome to this Monday, October 29th Market Watchers live show with your hosts, Tom Bowley and Erin Swinland. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Well, we're starting off a new week here, and so far, things are off to a good start, although we are off the earlier highs. You can see the Dow Jones Industrial Average currently up 116 points, the S&P 500 up 20. The NASDAQ up 17 points, was up quite a bit higher than that earlier today. The Russell 2000 still having a very strong day on a relative basis, but off its highs as well. 10-year Treasury yield bouncing almost 3 basis points today. It did close down below 3.10% support back on, really from the double top that we saw in August and September. So we did close down around that 307 area, but we're back up to 310 currently. The volatility index, which was retreating earlier today and was at about a 3-day low, has come back and is now down just fractionally. The financials leading the market to the upside. I know banks and both banks and life insurance companies doing very well today. Cooper Tire came out with their earnings today. You can see a huge gap up and a nice move higher, up 17% on the day. And the big news over the weekend, IBM agrees to acquire Red Hat for $190 a share. You can see the gap down on IBM earlier today, although we have recovered some of those losses. And Red Hat, somewhat surprisingly, only trading up at 170, even though the cash deal was for 190. That tells me there is some risk that this deal does not go through. So we will have to wait and see on that. But Erin, it's the start of a new week. I guess first off, how are you feeling?
I'm doing better than I was on Friday, that is for sure, but my voice isn't still completely normal, but I am feeling a lot better after a lot of rest this weekend. So had to miss out on a few Halloween parties, but had to get better. That was the important thing.
Yeah, well, you haven't missed Halloween yet, just the parties. So you still got Halloween to go.
Yes, and I don't have to dress up for Halloween, so that's a good thing. And now I also have my costume for next year. So that's a good thing.
Perfect. As long as it doesn't go out of style. I'm not going to ask what it is, but as long as we're good there.
Yeah, won't.
Anyhow, all right. Well, we got a lot going on. Market, again, volatile today, intraday. Looked pretty good earlier. Now reversing back down, trying to hold on to the gains. But what do we got going today?
All right. Well, let's see. This week we have your seasonality report coming up tomorrow. Dr. Alexander Elder, will be here with us Wednesday on Halloween. And then I'll be giving you the DecisionPoint monthly review on Thursday. Today, however, we're going to start off after news with Monday setups, and earnings spotlight will follow that. 10 and 10, our first symbol is going to be Booking Holdings, seems to be a popular one on the site right now. And then we'll finish up with the DecisionPoint report for the week. All right, Tom, let's go and get started. I know you had some economic reports and lots of information.
Yeah, there was one big economic report out this morning. Of course, not as big as the jobs report, which we had on Friday. But we did have September personal income out this morning. It rose 0.2%. Market was expecting 0.4%. So not quite as much as expected. And September personal spending did match expectations, rising 0.4%. Taking a look at the 10-year Treasury yield, let's take a look at that chart. And you can see, this is what I was referring to at the top of the show. You can see the top with the double top that we saw at 3.11%. We did break above that earlier in October. And of course, that generated a lot of the fears about higher interest rates. We did come all the way back down, though, and actually move a little bit below that breakout level before bouncing today. So at least today, with the 10-year Treasury yield moving up, it is a signal maybe that money is beginning to rotate a little bit away from defense. I actually saw that in the equity markets last Thursday when the market bounced, and we saw technology and consumer discretionary communication services, some of the more aggressive areas, lead the market. That was at least temporarily a good sign. We'll have to wait to see about whether or not that can stick as we move forward. As far as earnings goes, not the big companies today that we saw last week, but the earnings will be picking up later in the week. But among the companies that reported, First Data, FDC, that is in the financial administration area. We have seen Square get hit pretty hard, although PayPal bounced back pretty nicely with their earnings report. But First Data taking on the chin today, and it did miss its earnings by a penny, as you can see there. We'll take a look at the chart in just a couple minutes. A couple of others, though, worth mentioning. These are all companies that have market cap somewhere in the maybe 5 to 20, 25 billion range. Essex Property, you can see, did beat. The index came up a little bit short. That's a Russian company. Booz Allen and On Semiconductor both did beat expectations. After the bell today, you can see a number of companies that will be reporting later after the market closes. So you might want to keep an eye on those companies throughout the day. I don't like holding stocks into earnings, so that's not my cup of tea. But just be aware if you are holding those companies that they do report after the bell today. Okay, well, let's take a look at a couple of things going on in the market. I guess maybe the first thing, let's just take a look at that FTC chart, because that was one that really got hit pretty hard here. And you can see the stock is trading down near its low of the day. It's down 12.5% today. Volume was pretty heavy on Friday, and you can see that the weakness began back in September, actually, moving down below the 20-day moving average. We went below the 50, and you can see it has been very difficult since then to get back through that 20-day moving average. Now, we are quite a bit below the 20-day now, and you can see that the RSI has dipped all the way down to 22. So we're very oversold in the near term. I would expect a bounce at some point. But when we look at the relative chart, I was just mentioning the other financial administration stocks. If you take a look at FDC, we topped out back in the middle part of September and started declining in the second half of September, even though the overall group was still staying up near highs. So we started to see a little bit of relative deterioration in First Data back at the end of September. That continued through October. And then, as I just mentioned, the missing in terms of the earnings, they also missed top line too and guided fiscal year 18 EPS lower. So really the trifecta from a bearish perspective. And you can see the stock not only losing steam on its own, but also relative to its peers. Big drop there, and relative to the S&P 500 as well. Even though overall the group continues to perform fairly decent against the S&P 500. So that was one that was somewhat interesting. ESS, this is in the residential REIT space. So for those of you wanting to be a little safer, maybe in the REITs, this is one that I think looks pretty good. We had the breakout last week, moving to a multi-month high, actually a year-to-date high of 2018. And we pulled back prior to the earnings report, but today the earnings did come in. They were better than expected, $3.15 versus $3.14. And the overall group, even though it has been going down, you can see that Essex has broken out. So on a relative basis, you can see the last 3 months, we've seen tremendous strength in the stock relative to its peers, relative to the S&P, and then its peers, its industry group, is actually broken out to a 2018 high relative to the S&P 500. So it's a pretty good looking stock within a good area of the market. And because it is in the REITs and real estate, a little bit more defensive. So if you're afraid of the market, this is a stock that might be something that you may want to take a look at. I mentioned the CTB, which was Cooper Tire, or at least mentioned the tires. Well, actually, I want to talk about the tires a little bit because they've got a fascinating seasonality for November and December. But here is Cooper Tire. They did come out. They missed on their top line, but blew away the bottom line, $1.07 versus 46 cents. They went on to talk about the fact that they had higher raw material costs and mentioned the tariffs and proposed tariffs, and that they've been able to partially offset the increase in those costs by raising prices. Whatever they said, the market seemed to like it, because you can see a big gap up. We do have overhead resistance, which is very significant, up near the $31 level. We are trading over 30. Stock's up 18%. I think it looks very interesting, especially when you consider what these stocks in this space tend to do in the months of November and December. But let's pull up the seasonality, and I'll just show you the group. Well, you can see, first off, the last 5 years, we've gone up every year during the month of November. And when we go back over the last 19 years, so almost 2 decades, you can see that November and December, to me, just kind of stand out as months that this is, this group, or even the stock, CTB, is, you might want to consider. The average monthly returns in November and December, 4.3% and 5.9%. That's a total of 10.2%. And that's just 2 months out of the year. That's a pretty good annual return. And that's what this group has done just over the last 19 years in 2 months. So let's pull up CTB on the seasonality chart. And you can see the last 5 years up 100% of the time, 5.7%. And we go back last 20 years, November only 2.3%, but you can see really picks up in December. And when you look across the monthly returns, outside of April, December is the best month of the year. So seems like we're moving into that period where the tire stocks do very well. And CTB coming out with its earnings and a positive reaction is one maybe to consider, especially if we can get that breakout over $31. Okay, as far as the overall market, I did notice that the NASDAQ 100 was underperforming. We had a great move to start the day, and then we fell back. And the primary reason, or I'm going to give you 2 reasons, Amazon, you can see after gapping up a little bit at the open, it is now down $73, 4.5%. Of course, it's got a huge market cap. Wasn't that long ago, less than 30 days, we were talking about it becoming the second trillion-dollar company. But after this move in October, I mean, it's been a long time since we've seen Amazon take the kind of hit that it has taken here in the last 4 weeks. But another company that is contributing is Netflix. And Netflix is down $15 today, over 5%. And it too, maybe not the entire month of October, we had a little bit of a bounce there. But notice with earnings, when we got the gap up, we could not break out, and we've come back down and we've lost these key support levels. So Amazon and Netflix really weighing on the NASDAQ 100 right now, and that is problematic. Another big company in the NASDAQ that reports earnings tomorrow, Facebook. And when we take a look at the longer-term weekly chart here, I'm very interested to see what happens with Facebook. And I'm actually going to bring up one thing, maybe a little teaching moment here. If you've ever used on-balance volume and the accumulation distribution, I want you to take a look at this weekly chart on Facebook. And actually, I'll make the height of this even bigger so we can get a good view. But take a look at how different these two have been on Facebook the past 3 or 4 months. On top here is the OBV. Actually, I'm going to make this chart even bigger so we can get a good look here. All right, so here's the price action coming down, but OBV is held up pretty well, and the accumulation distribution line has been going straight down. Now, I know Arthur Hill, when he looks at this, takes a look at both of these, both the on-balance volume and accumulation distribution, and he feels best when they tend to move together. And when you look back, they have tended to continue going higher with the overall price in Facebook. But since that big move down in July, the on-balance volume seems to be holding up pretty well, and the accumulation distribution is getting absolutely crushed. The difference here is that the OBV, when you look at it on a weekly basis, if we finish higher and the volume, whatever the volume is, if we finished higher than the prior week, OBV considers that a positive. So it continues to add and continues to move higher. The accumulation distribution line looks at the candlestick, doesn't care whether it went up from last week or not. It looks at the candle, and if it closes in the upper half, it adds it. If it closes in the bottom half, it subtracts it. And you can see on some of these weeks where we went higher in Facebook, notice that the candles reversed. So we finished near the low. And that is what causes this divergence between on-balance volume going higher and accumulation distribution going lower. I tend to side with Arthur. I think that I would view these two mostly together. And when they give you different signals, I think you really need to be careful about using one or the other to support your case. Okay, I know we got a number of upgrades, downgrades. Erin, what do you have there?
All righty, let's go ahead and take a peek. Got a few of them, quite a few actually, so we'll try and move through these pretty quickly. All right, so our first one upgrade is from, it's Cerner Corporation, CERN. This one was upgraded from a market perform to an outperform today. And you know, when I first looked at it, I thought I saw a big gap down for the day, but no, that actually happened Friday. Friday it had a really big decline. It's certainly made up some ground on this upgrade, but when I see a big drop like that, it is on that support level. But this looks a little bit it looks very volatile right now. I would prefer to stay away from that. But on the upgrade, I'm not really thrilled with this chart. ConocoPhillips was also upgraded today by B of A from a neutral to a buy. And again, not the best looking chart, but we do see we had support hold somewhat here at the 200-day EMA. It did actually close below it last week, but it did manage to get back above, and it is, it's mostly unchanged right now, but we do see the PMO is trying to make that turn toward the upside after hitting this area of support. It's been upgraded, but there's some pretty serious overhead resistance, in my opinion, as far as short term and actually longer term. You can look back here and see that it looks like $73 level. I'm sorry, $72, $71 level is going to be the big problem as far as overhead resistance. So if you want to keep it on a watch list and wait for that PMO, you certainly could do that, but not really thrilled with that one. Ford, Goldman upgraded Ford from a neutral to a buy. And, Ford has actually been making a nice move starting last week, really. It managed to break out above this previous declining tops trend line, this short-term declining trend. It's now broken away from that longer-term or intermediate-term declining trend, and it is ready now to start challenging that 975 area, where you can see resistance lining up pretty strong here from February, March lows up over here to that September high. So 975 is really going to be the proving ground here. I suppose you could take a ride up there to that area of where it's going to get tested, because certainly that would be a nice enough move. But, PMO buy signal, I think this one looks pretty good. But personally, I'm not really getting too involved in purchases at this point. You do see also in that thumbnail, the 5-day EMA just crossing above the 20-day EMA. And that's going to give you a short-term trend model buy signal right now on Ford as well. So it's looking pretty good. And the upgrade certainly helped it a bit here. Proofpoint was upgraded today by Goldman and KeyBank from neutral to buy and sector weight to overweight. And the market seems to be liking this. Very similar chart to Cerner. You've got the big gap down that happened on Friday, and now you're getting a nice rebound on this upgrade. But, we've got a PMO that just had a sell signal, obviously, on that big drop, not a surprise. But actually, I think that move down was already occurring. I think we already had a top back here. But we have the sell signal. PMO doesn't look like it's really that interested in decelerating. On balance volume is at a lowest level we've seen all year. That looks like pretty strong overhead resistance. They upgraded it. I certainly wouldn't. Other big name upgrades that I didn't cover would be Budweiser, Bud, and Lennar was upgraded, LEN. Let's look at some downgrades. B. Riley downgraded Applied Materials from a buy to a neutral. And I had to pull up the weekly chart on a couple of these downgrades. But you can see getting very close to support here at $30. Very oversold PMO on the weekly chart, but not showing any interest in turning around just yet. AMAT's getting ready to hit some support at about $30. We'll see if it can hold that. Electronic Arts, KeyBank upgraded it from overweight to sector weight. Dropped below on Friday, some support out here from the October low. And I'm sorry that this is a weekly chart. We had to go to that to find the bottoms here. The support levels already broke down below that 2017 low and now headed to test the top that we had back here in 2016. So heading definitely the wrong direction. Electronic Arts not looking good. Finally, Mohawk I wanted to talk about just because it was downgraded by 3 different sources, Credit Suisse, North Coast, and B of A, all downgraded Mohawk. And boy, not a surprise when you look at this very, very ugly chart. It fell below that 2014 level. We're now sitting at levels we haven't seen since 2013. And right now getting ready to test some support from 2013 at those lows. Looks like at about $102, $103. I'd expect this one to continue to fall lower, especially after 3 downgrades. Other downgrades I didn't cover: Western Digital, WDC, Colgate Palmolive, CL, and Lam Research, LRCX. All 3 downgraded today as well. That concludes those upgrades and downgrades. It's time to move on to Monday setups. I hope you've got some good ones. I actually was pretty surprised. I came up with 5 really good ones right out the gate on my scan. Very shocking. But let's go ahead and look at what we did last week. You definitely won the game there with your short on HPE. So I think I've got about 8 cents right now. We'll go look at that chart. But I think, Tom, you definitely win that one.
Well, I had to move to the short side to do it.
Yeah.
Market certainly helped. I mean, being to the downside, no doubt.
Yep. All right. So here was mine, Algonquin Power and Utilities. And I got it at 1010. We're looking at 1019 right now. So, you know, not bad, pretty decent. PMO is now on a buy signal. If you did get in, I'd be holding it. I think it still looks pretty good here. And let's see, HPE for you, Tom.
Yeah, and I think anytime you see the market with a volatility index as high as it was last week and going down, if you're not on the short side, I think one of the lessons there is that if you are in utilities or real estate, consumer staples, those types of areas, you have a better chance of making money on the long side than many of the technology, consumer discretionary names that got hit so hard last week.
Yeah, absolutely. All right, so yeah, this one I would say on a short probably could hold on to it, but it did make that support level at 1450. So
yeah, that's a pretty big area. I think when you go back throughout the entire year, we've had that. This is the 4th time going down to that support level. If I didn't short it, but if I had shorted it, I would have taken profits at 1450.
Yep.
But I guess it's down. I think it was 1570 or so when it went out. So it's down almost $1. So
yeah,
that kind of fell along. And this was a technology stock. I mean, just kind of did what technology did, unfortunately, which was go down.
Yeah, you can see the 50 getting ready to cross below that 200. So it's certainly lining up negatively. But yeah, that support area did hold it, but whether it can continue to, we'll have to see.
All right, so what do you got for this week?
All right, and I haven't picked which one, but I ran my PMO scan and I got only 5, and it was these 5 that I got, and so I'm going to show you all 5 of them. When I went through them, I'm like, yeah, I think all of these look pretty good. So let's go ahead and go through them. I haven't picked which one, so as we're going through them, I'll probably figure out which one I like best. All right, so our first one is from Property Casualty Insurance Industry Group, Gallagher Arthur, AJG. And I like this because we have the PMO that's turned up. You can see scooters now in that hot zone, heading for that buy signal. Don't have it just yet, but you can see the PMO is now in positive territory. Had a nice breakout on Friday, closed above the low we saw back here from September. So I thought that was pretty positive. And now, we made a move back up and we're pulling back toward that breakout point. So I think this one actually has a pretty good entry right here at about 74. We'll figure out if this is going to be my pick, but I think that one looks pretty good. And it's interesting, Tom, because you were talking about the different sectors, and a lot of mine didn't come out. A couple of these were in certainly not defensive sectors when you're looking at Crocs here, which is my second one in consumer discretionary. The only issue I have with this one is that it's now challenging this short-term resistance up here that we saw in October earlier here, that mid-October top. But I think you could make a case for either like a double bottom here, or it's a really rare formation, but sort of a diamond shape formation. Those are bullish as well. So I'm looking for the breakout. We don't quite have it, but I think everything's lining up nicely on the chart to get that breakout for Crocs. JW Nordstrom, Nordstrom Incorporated. Again, this is consumer discretionary, I realize, but some of these are perking up and starting to look really fairly good. This one, we've got a nice breakout today from pretty strong short-term overhead resistance at those October highs and at the top here in August that we saw. So I like the breakout. I would be looking for a move to test overhead resistance at that. I suspect it's an all-time high, but the high we had back in September, I would expect to be tested here. Because, I mean, look at the PMO looking pretty good here. Hot zone for the scooter, you know, OBV holding up. So I like the Nordstrom. I think that one looks pretty good. XLNX, I'm not even going to try. Technology. So again, I'm really shocked that all of these came up in those less than defensive sectors, really more aggressive sectors. But, you know, the charts were looking pretty good here. This one's probably my least favorite. You know, mainly because it got the PMO turning back up because of this, you know, big gap up move that we saw back here. We did get the breakout over the short-term top back here earlier in October and the top back here in early September, but we're pulling back, you know, since breaking out from that area. So this one's probably not on my favorites as far as the Monday setups that I have picked. But I think, you know, the setup makes sense. 5-day just crossed above the 20-day EMA. I can see why it came up on my scan, but probably not my favorite of all of them. Celeron Pharma. This is biotech, XLRN. Nice breakout, like we saw, I think it was on the Algonquin one. Nice breakout, and now a pullback toward the breakout point. Always like to see that. This is a double bottom, I would say for sure, coming off of that decline. Looks like a short-term reversal heading out here. You know, it popped above this area of overhead resistance today, but it's pulled right back, and it is trading at its low for the day. So I'd just be a little bit cautious about that. The PMO has since flattened since I did my scan, but I still think that double bottom in play, the pullback to the breakout point, I think this one still has some upside potential. And those were my 5. So now I have to pick. I think I'm going to come back to this one. Crocs look pretty good. Wow, I don't know, Tom. I got to pick one of these. I think I'm going to go with the first one, AJG, the property casualty insurance one, because it did have that nice breakout, and it's holding the breakout even with the pullback. And I do like that pretty deliberate move by the PMO rather than a yank to the upside. So I think I'm going to go with AJG Gallagher. And let's see, it's 74.42. And yeah, I think that'll be the one.
Okay, sounds good. It's got to be one of the better performers in that space, because I know many of the property casualty insurers have been down, along with, well, just insurance in general has really struggled. The financials, I mean, you know, that whole area has been really weak. So the fact that the stock's close to the high of 2018, I think suggests that you've got a pretty good stock. And that scooter down there, 86.8, looks pretty good as well.
Yeah.
So, okay. All right. So I got some stiff competition. So let's see. I'm banking on the market reversing this week. I thought it could be Friday's low with everything coming back. I mean, who knows? But I'm going to go ahead and go with a company that was beaten up really badly after a huge move up in September. I mean, the stock went all the way from 120, went from 87.50 up to 120 in 2 weeks, less than 2 weeks. And you can see the volume that accompanied that move to the upside. I think there was a lot of accumulation taking place. And I think the overall market just being so weak, I think this is a case of the baby being thrown out with the bathwater. The stock has come all the way back down. I'll get an update. Let's get the most recent price, 87.25. So I'll go with it here. You know, every stock out there, I would definitely keep a stop in place, especially if you're trying to time a bottom. because if you're off by a day or two, it can really get painful. So I'd keep intraday stops. I wouldn't necessarily buy this one just yet. I would be looking to see if it goes down below Friday's low and we can get another reversal. But it is that gap support right here is 87.50. And we opened today at 90 and 89.96. And we've come back down below gap support, just like we did on Friday. And if we get another reversing candle, I'd feel much better about it. But anyway, AVAV, I'm going to go with it at 87.25. I think that right before the gap up, you can see the low got down to about 85. I would not be too excited about this company if it fell much below that 85 level, even on an intraday basis. And also watch the volume. If the volume began to expand, it would really make me nervous. So again, this is going to be an aggressive kind of a pick because I do think that the market is trying to find a bottom here. May have already found one. If not, I think we're going to find one early this week. So I'm going to stick with AVAV, but there are some other stocks that I do like. So let's go through those. This one I featured in my article this morning, my blog article. This is TTD. It was up much more earlier today when the NASDAQ jumped, and this is in the software space. So it got back up to 114.68, pulled back. The reason I didn't go with it as my pick is that the stock was actually much higher, probably 30 minutes to an hour ago, and I just didn't want to chase it. It has come back down, though. I think this 110 area down to maybe even Friday's low around 106. I think that this area is very interesting. The company, you can see the last two earnings reports have been massive blowouts. I think this is a company that could begin to start to move higher as earnings approaches. And I think they report sometime first, maybe second week of November. So you want to be watching for that for sure. But it has been beaten down. And I think if the market strengthens, we could see a nice rally in TTD. Twilio, TWLO. This is another one that is going down, and you'll see a common theme here, but there's gap support. We did go below gap support on Friday. We held, we bounced, finished nicely. I think this is another one that if I'm trying to keep my stops fairly tight, I think doing so from key gap support levels makes sense. This is an area where I think we could start to see some strength build in many of these companies. WMGI, this is in the healthcare space, right? Medical group. It's been sideways consolidating for a while. You can see that this gap support area just below 26.5 has been holding. So Friday we came down, tested that area. We might get back down there again today, but I do think that area carries much less risk than, say, where we were a few weeks ago, up near the top of the range. So WMGI is one that I think looks pretty good. PINC, this is Premier Inc. After the huge gap up back in August, look at the reaction low, down at about 42.60, 42.70. We bounced, went back up near the high, came back down again just below $43. And then you can see that long tail below 42 on Friday, but we came back up and held the area of support today. Another one of these pretty wild days on the stock. But I think this is an area where PINC could reverse as well. On Deck Capital, ONDK, another one, gap support. I think you're kind of getting the idea here. 679, I think, was where we had closed back in August before the huge gap up with heavy volume. It's taken almost 3 months, but we've gone all the way back to fill that gap. I think reward to risk here is solid. And then the last one I have is HEI, which is Hyco Corp. Another one, as you can see, there's a massive gap up. We filled the gap, gapped up earlier today, but pulling back, maybe another chance down around that 81 level. But all of these, I think for the most part, you could keep fairly tight stops in the event that the market begins to sell off again. And as I've said many times before, I wouldn't try to be a hero in this market. If it starts selling, I don't care what the signals were last week. When you've got a volatility index as high as we have it right now, if the market begins to break down, I don't think I would be trying to, try and time the exact bottom. I would be back on the sidelines. But there's our setups for this week. Erin goes with AJG. I have AVAV. And those prices are not correct. We do need to make sure we get those prices correct. But those are the two stocks that we went with.
Yep.
All right, it is time to go into earnings spotlight. Earnings spotlight, I just want to say, number one, there's a lot of earnings coming out the next couple of weeks. And what I'm going to do is focus on some of the larger companies and what their charts look like as we head into the earnings later this week. So let me first pull up Facebook. Facebook reports tomorrow. You can see that actually now I'm gonna come back to Facebook. Let me see. I had another stock I want to show first. Let's go with I don't know if I pronounce it right. Mondelez, MDLZ. I'm giving it the French pronunciation. I'm not sure if that's correct or not. But anyway, MDLZ, this is a pretty good sized company. I want to say maybe $60 billion company. They report after the bell tonight. You can see that the last time they reported, late July, got a nice gap up, but we've actually gone back down. And as of Friday's close, we had not only filled the gap that we saw here, but we actually moved below it. And you can see that the technical conditions have deteriorated. We failed at the 20-day moving average, continued to move lower, lots of volume to the downside. I don't know that this guarantees us anything, but it does appear that there has been some distribution going into the earnings report. If we do get a gap up, you might want to wait, see if we get if there's going to be a failure. I think that 20-day moving average is something I'd watch pretty closely. KLA 10 core. Semis have been in the news. We saw Intel come out with a really nice report on Thursday evening and got a nice reaction on Friday. KLAC is in that same space, semi-equipment manufacturer. And so you've got the stock, which has been on a tremendous move to the downside, $120 2 months ago. Now it's down to 88. That is a very significant decline in just a couple of months in a company that is this big. And you can see the selling that's taken place, the volume. I don't know. I mean, we might get a temporary bounce with the earnings report, but I would be careful, even if they beat like Intel did. There's something going on here with all this distribution taking place. Akamai, AKAM, they also report after the closing bell today. And this is another stock that's been stair-stepping lower for quite a few months here. We topped back in June, pulled back, and you can see we just keep putting in lower lows, lower highs. We need to change that pattern to the downside. You can see the volume picked up in October. Another one with kind of negative, kind of a distribution type pattern that seems to be taking place here. So don't have a whole lot of good feelings about Akamai. And it's another one that even if they do come out with better than expected numbers, we'll want to see what kind of reaction we get from the market. We saw Netflix, which I showed you earlier today. They had a good report. They gapped up, but the reaction afterwards was just selling, and more selling. And so that's what I'm referring to here. Do we just gap up temporarily and move back down? Something to watch. Now we'll get into Facebook. Facebook reports tomorrow. Facebook, you can see, continuing to perform poorly. It is now trading. It would be a new low close for 2018 if it closes down at this level. The weekly chart is very poor, in my opinion. I've been on record for a while saying I think Facebook's going down to 100. I just don't like the chart. Now we have the potential, even if we get a good earnings report, we have the potential of a downsloping neckline. And if we get a decent reaction to the report from Tuesday, we could get all the way back up, maybe close to this 170 area. And I think that would maybe just put in a lower right shoulder for another move to the downside. I think Facebook is one of the weaker looking stocks from a technical perspective right now. Among the big stocks, I would continue to shy away from Facebook. Pfizer, let's go back to the daily chart. Pfizer, I think, looks really good. It's been a great performer. I know when we've had Mary Ellen on, she's talked a bunch about the pharmas and how they've looked pretty good. And I think technically we've pulled back over these last couple of weeks, but on a relative basis, this is a stock that's been way outperforming the S&P 500, the overall market. And so I think the stock still looks pretty good. I wouldn't be surprised to see a pretty good reaction from Pfizer tomorrow after its earnings. MA, this is MasterCard. They report tomorrow. And you can see threatening key area of support. We've had number of bottoms down around 192 to about 195, 196. And we're at 195 and change right now. This is off of that early October high near 225. So MasterCard, very weak. I see a flagpole and flag action. Not expecting too much here out of MasterCard. Coca-Cola, KO. I know Erin and I were talking about this one last week. I think it may have been under the radar or one of those segments. But I know it was breaking out intraday when we talked about it. But look at that long tail it left up there. And 2 days later, how it came back down. that is a pretty good sign to sell as a short-term trader. When you get a big move up through major resistance and you can't hold it into the close, that is a short-term sign. We could be going back down, but I still like the chart. I think Coca-Cola looks pretty good here. I think it's in a good space, and I would not be surprised unless they really come up with a bad report. I would not be surprised to see the market maybe move higher and buy Coke on its report. BP, this one in the oil space, energy just absolutely getting blasted over the past few weeks. And BP, after trying to make a breakout above that May high, got close in June and July, but we went all the way back up there late September, early October, failed. And you can see it's been a ski slope lower. A lot of volume coming in. I don't know, this stock and the area in general, just very volatile. I would be afraid to hold stock like this into earnings. I'm afraid to hold any stock into earnings. Amgen, the biotech space. We just saw Celgene come up with a better than expected report. I think Biogen, not bad. I think Amgen comes out with a decent report. I just don't know if the market will reward it. I'm looking maybe at that declining 20-day moving average. So maybe we have a few dollars to the upside, but I'd like to see it get back through that 20-day. GE, wow. The stock looked great early in October, and once again, we have made a move all the way back down to that prior low. Is this a double bottom? I don't know, but I would not be feeling very good going into another earnings report with GE. ADP, now we're moving on to some of the Wednesday reports. ADP, automatic data processing, did put in a lower low. You can see, again, that failure at the 20-day, heavier than normal volume on the selling. Another one that looks like it's under some distribution. I would be looking maybe back down to that August low. I think if the company doesn't report blowout earnings, I think we could see ADP perhaps back down to that 130 area. That's a big level there. ESRX, Express Scripts, sideways consolidating in a bullish flag. I think this one, among all the ones we've looked at so far, I think ESRX looks pretty darn good. It is in the healthcare space, so maybe a little bit of money rotating into that area for defense. I think this one looks pretty good. A good earnings report, and I'd be looking for a gap up above, say, 97 for a confirmation of a breakout. Estee Lauder, EL. Stock's been under a lot of pressure. They've had some pretty good earnings reports in the past few quarters anyway. They've had a few, I think, if we stretch this out. Take a look at a year. Actually, we got looks like the gap down in May. Maybe this was the one I think that we got the gap up. Maybe the last quarter we got a gap up, but they are going to be reporting on Wednesday. And right now, after breaking down below this double bottom, really a head and shoulder type pattern, I don't know. It seems like it's got potentially some more room to the downside. Be a little nervous. Look at all the volume coming in too on the selling in October. So another one where it looks like distribution is a problem. Now, some of these, we may be getting sold out on some of these stocks. So if we do get bad reports and we gap down and then recover into the close, I think that could be a bullish signal. But again, we'll have to wait and see what kind of market reaction we get. General Motors reports on Wednesday. And we did get a gap up earlier today. I think the whole Ford upgrade, I think some of the autos doing pretty well today, but trying to get through the 50-day moving average. A lot of support we saw on the way down at about 34 to 35. You can see the March low, May low, August low, all turned between 34 and 35. Had a little bit of movement, false breakdown, false breakout, and then back down we go. Now we're back into this 34, 35 zone. Interesting to watch that on GM. ICE, Intercontinental Exchange Group, big support at around $72 on this chart. Another one that reports on Wednesday. If it gaps down below 72, I would be concerned here. Finally, a big company, Apple. The biggest company. Apple's still holding in pretty good when you consider what's been going on in technology. I know it was up in the 230s to start October, and it's 216 now, but I still see this stock outperforming most every other company out there, especially the big ones like Amazon, Netflix, and so forth, even Microsoft. I see Apple probably coming through with a pretty good report. I think the market is expecting Apple to come through with a report. If they do not, be aware, left shoulder, neckline, head, right side of the neckline, which is down sloping, right shoulder. If they do not get a good reaction from the market, we could see a head and shoulder breakdown, which would measure down probably a little bit below 200. I'm going to say maybe this gap fills. We go somewhere in the 190 to 200 area if they disappoint with their earnings. Dow DuPont. They will be reporting on Thursday along with Apple. And look at the distribution. Look at everything taking place here. This was a group I think that Mary Ellen may have touched on Friday in the What's Not segment. You can see Dow DuPont just has been straight down, $71 at the end of September, all the way down to 51 and change on Friday. Bounced a little bit today, but the volume, massive distribution taking place. I don't think the report's going to be good. I doubt their guidance is going to be good. We might see a little bit of a relief rally, but this is not something I would be getting behind. Starbucks, pretty good looking chart here, actually, given everything that's going on in the market. And restaurants and bars have been one of the leading areas in the market, certainly among consumer discretionary stocks. So this is going to be an interesting one going into earnings on Thursday. If you look at a long-term chart, I'm going to pull up a monthly 15-year chart. Look at the sideways consolidation Starbucks has been going through for the past 3 years. Really hasn't participated. So the big number is going to be in that 63 to 65 area. This one I'm going to be watching. I think Starbucks could be interesting on Thursday. Kraft, KHC. Downtrending for the last few months. I do think we're trying to maybe find a support level. That early May low, I'm going to go back just a little further here and see if that was a key low. It was early May. I think you can see that's very important. We went all the way down to 53 or so, bounced. We've gone back down. We've tested 53. I think we're in a 53 to 64 range, and we're sitting at 56. So I think if we get closer, if the report's not bad and we gap down closer to that 53, 54 level, I think KHC could be interesting for a short-term bounce. And my final two are earnings that come out on Friday in the oil patch. Of course, ExxonMobil, pretty big company. Last low we went down to in August was about 77, maybe 76 and change. We hit 77 on Friday, trying to bounce off of it. But again, ExxonMobil has been extremely volatile of late, along with energy in general. And the final one, CVX. Chevron Corp breaking down below the September low, and not too far from pretty big support from those February lows. So the whole reversal in energy having a big impact even on some of the larger energy companies, ExxonMobil, and as you can see here, Chevron. So these are just some of the companies that we're going to be looking for to report later this week. I want to tell you there's about 1,000 companies slated to report this week and another 1,000 next week. So between these 2 weeks, we're talking about the market digesting 2,000 or more earnings reports. I think it's going to be really big for the market to put in a bottom. If it doesn't put in a bottom with all of these earnings reports coming out, I'm going to grow much more bearish with the market, but we'll see. There's a summary of all the companies I just covered. I did go through quite a few of them. And let's bring up that poll and see what everyone thinks, because we did mention some of the bigger companies on the NASDAQ that are going to be reporting later this week. And it looks like the audience is going to side with, of course, Apple. 54% believe this is the company that will get the best market reaction. I'm going to go with Starbucks. I think Starbucks gets the best reaction. What do you think, Erin?
Really? I did Apple because they have been holding up so well. I feel like the market's going to consider them a darling if they hit all the numbers, which they should. So
I hope they hit for the sake of the market.
Yes, exactly. That'll probably certainly kill it.
Well, you see what Amazon's doing to the NASDAQ 100 right now. I mean, imagine Apple, if Apple disappoints, along with Amazon, along with Netflix, along with Facebook. It's going to be hard for the overall index to recover if you start looking at many of those large FANG stocks and you can't get, any kind of support on the key ones. It's going to make it very difficult for the NDX and for the NASDAQ.
Yep. Well, let's see.
All right.
It's time, isn't it?
10
For 10 and 10. All right. Really, I've got to share this because look at the what we have selected here for 10 and 10. I don't think I've ever seen this many lined up at the top. We usually do get a lot of consumer discretionary, but look at technology. We only have one. I mean, I think that does tell you about the health of the market and just by people's interest in where it lies, you know. Mm-hmm. But I thought that was very interesting to only have one tech stock be requested. So anyway, but let's get started with the first one, and everybody get in there and vote for your favorite request in the chat room because the most popular will be next.
All right, let's start with booking. All right, I got a couple things I want to show here. First of all, I didn't annotate. I do think that this is getting close to a pretty key support. This is a 1-year chart. And if I annotate here, I think the closer we get down to 1650, the better I like booking. I want you to keep in mind, though, and I talked about this last year, and I think it was maybe in September, you've got to be careful with booking in the last part of the year. Booking holdings for whatever reason, maybe it's the anticipation of the summer travel, whatever, booking holdings loves January through May, and I'm going to show you that in just a minute. But as we move lower, maybe put this on a calendar or something to keep an eye on. If the stock continues to move lower into the end of the year, really pay attention if it gets down to 1650. So that's all I'm going to annotate, but I do want to show you the seasonality chart on this one because it's one of the more absurd seasonality charts that I have seen. So let's take a look at booking on a seasonality basis. I mean, outside of maybe the anticipation of, the summer months, late, spring and summer travel, take a look at this chart. Okay, so if you start in June and you add up these average monthly returns coming across here from June through December, it's negative over the last 20 years. But take a look if you go, and actually we could even throw May in there. May isn't that great. But look at January through April. I mean, that's what, 14.3, 21.9, 33, 34.6% booking holdings, averages gaining in the first 4 months of the year over the last 20 years. 34% is their average. And so if we go back and we take a look at that chart one more time, and I'm just going to take it back over the last couple years. I want you to see just last year what happened. So here's where it began the year, and look where it was at April. I mean, the stock went from 1,750 up to 2,200. And then, just like we've just talked about, just kind of falls apart. Look at 2017 till the end of April. Now, we did go a little bit higher into July, but the rest of the year was not so great. So this is a stock that I think from a seasonality perspective, we really need to pay attention to. I don't like it right now because I think it is in that seasonally weak period, but that's a big low down here around 1650. So I think if the stock continues to weaken as it gets closer and closer to that level, I think booking could be a great trade heading into 2019.
All right. And the most popular in the chat room happens to be, let's see, SFM Sprouts.
All right. I like the chart. I mean, it went back. You can see we kind of double tested this or back tested this bottom from earlier in October. And now we're starting to move back up. You can see a lot of failures, though, at 28. And that is almost where we are now, 27.75. So I think for now, we're just simply sideways consolidating, but off of an uptrend. So that, to me, is bullish. I would be watching the lows that were just established and retested. So I think 26.5, certainly you get much below 26, and I'd be a little nervous here and watch the volume. If volume picks up, that would be bad. But in the very near term, I think 28, you can see as we made our move down, we've had multiple tests at 28, probably about 7 or 8 of them trying to get through. Today's high, 27.96. Good volume, and he moved through 28 would be bullish. Good volume, and he moved below 26.5, 26.25, and that to me would be bearish.
All right. Let's see, the next one I'm going to give you, it was also very popular, came in second, in fact, and that would be McDonald's, MCD.
Yeah, I think McDonald's is still a really nice looking chart. And again, it's a way to stay away from technology, some of the more aggressive areas. It's in that restaurant and bar area that I talked about with Starbucks. Many of these stocks are seeing some love. I know we did fail to hold this breakout level, but I think as long as we're holding on to this gap support zone down here between, say, 166 and a half and maybe 171, I think that's going to be a key area on any pullback. As long as we hold that, I'm fine with McDonald's. I like it.
Okay. Next one up, our only financial requested, JP Morgan.
All right, JP Morgan. Well, the banks are having a really good day today along with life insurance, and that is certainly helping. JP Morgan 102 is going to be the key support I'm going to watch. This has been one of the better bank stocks out there. I know it's had a rough probably last 4 or 5 weeks, as you can see. But on a relative basis, some of the other banks which have broken down, I would definitely take JP Morgan over many of the others. So, again, another large company, great long-term record. If I'm going to get in and I want to be in the market, but I want to be a little careful and I don't want to, go too aggressive, I think JP Morgan is a good stock. The February low came down to 102. The June and July lows, 102. Last week on Friday, we were down to 102 and change area. This is clearly a major support level for JP Morgan, so I'd watch it accordingly.
All right. Let's see, the next one I'm going to give you is Yandex from the Comm Services, YNDX.
Yeah, I talked about this one at the open just with the earnings. But the stock gap up a little bit today, pulled back. I still see it in a downtrend. And the problem is it is in the internet group. And internet stocks are just out of favor right now. I mean, you look at the Facebooks, the Googles, Twitter's been bouncing back, but most of those internet stocks really under pressure. And so I would probably hold off, even with the gap up earlier today and the well, I don't know what they did with their top line. I know their bottom line came up just a little bit short, but it might just been a little bit of a relief rally on the gap up earlier today. So I would say this: if it can get back through price resistance and the 20-day moving average, I would begin to look at it again. But for now, you can see that was the breakdown. And this wasn't a breakdown on light volume either. This was a massive volume breakdown below 29 and a half. And you can see the 20-day moving average now just below 30. So I think it's got to get back through both those levels before I would consider it.
Okay. Let's see, big breakout it looks like today for Ross Stores, ROST.
Yeah, really nice move to the upside. We are still trying to get through on a closing basis that high in October, early October, but I see an uptrend in a cup. I would honor the resistance. So as a short-term trader, I would probably be a seller. But if it broke out, I would have no problems buying it back and owning it. I think this is a key area of resistance we want to watch. To the downside, I think we got pretty good support that comes in around 93, 94. So this is the trading range for now. So if I sold it here and we saw another pullback back into the mid 90s, I could buy it back easily. Or if we get the breakout, I think it's a nice looking chart though. Pretty good volume trends compared to what we've looked at on a lot of charts today. I think Ross Stores is bullish. I just would respect that resistance.
Okay. Let's see, next one, our only utility, NRG Energy, NRG.
All right, NRG. Well, we did put in a doji, which could have marked the bottom on Friday. Notice that we did fail, though, at our first attempt to get back through that 20-day moving average. So I'm going to say, actually, let me get this trend line in here, too, because I think the trend line is going to intersect pretty closely with the current price. It does. So right there, I'm going to say if you close, or even if you move much below Friday's low, I'd probably have an intraday stop around 35 on the stock. Just not take a chance. It's been a great performer on a relative basis, on an absolute basis, but that's a pretty key trend line right there. And also, I think the doji should mark a bottom. If it doesn't, and we go back down below that low, I would probably move back to the sidelines.
Okay. Let's see, next one up, Cooper Tire. That would be CTB.
All right, I just spent a little bit of time going over
okay. Well, let's do, how about PPC, the monthly chart?
All right. monthly. You don't see me pull up monthly very often.
Yep, they asked for it. That's why I mentioned it.
Okay. Well, pretty good support. I'm actually going to shorten this just so I can make the candles a little bit bigger. Let's just do 10 years and see if that helps. Yeah, I mean, it looks like the 17.5 area is pretty darn good support going back the last few years. And I'm going to, now that I know what this chart looks like, I'm going to actually go to the weekly chart and just go like the last 5 years, because that's the key support to me on this chart. And this way we can see it a little bit better here. Okay, so on this longer term weekly chart on PPC, I definitely see this being a major support area. We have not had a weekly close below about, I don't know, 1650 or so. And you can see on an intra week basis, we haven't been much below about 15.5. So this is the key area. We've come down, we've tested it. I'm not going to lie, I don't like a stock that's been going from 38 down to 17 in 2018, because the market has done nothing like this. So on a relative basis, Pilgrim's Pride's been getting absolutely killed to the downside. You can see the failures on the weekly chart. If it, when it gets through the 20-week, I don't know that I would try to time this bottom, even though it does have good support and I could see the argument. I think I would wait and get some volume and move back through this 20-week moving average. I'd like to see a little strength here rather than going back down and testing this area of support. So for me, it would be a hold or maybe just a watch for now. And if we could start to break out and get some volume coming in on that breakout, then I'd be a little bit more bullish.
All right. How about ExxonMobil, XOM?
That's another one I just looked at for earnings.
Oh my goodness. Okay, well, we'll switch that with EWZ. I know that one's off the charts today.
All right, EWZ. Yeah, Brazil gapped up, pulled back. This is another one I need a longer term chart. Yeah, one thing I'll just mention is that with the dollar that has been so strong, EWZ is not going to perform as well as the index, the underlying index that it tracks. So you want to keep that in mind when you trade any of these foreign ETFs, ETFs that are designed to track a foreign index. The dollar can have a major impact. I am bullish the dollar. I think the dollar goes a lot higher. So I think a lot of these foreign ETFs, the EWZ, the EWG, many of these different iShares, these ETFs, I think you got to be careful with because of the dollar. So technically, we are up above the 20-day moving average if that's what you want to use. But you're really, in order to have a really good return here, you need to see the dollar drop. And I'm not sure that's going to happen. So I would maybe just watch that 20-day. And if it failed to hold, probably would be out. But honestly, given my forecast for the dollar, I would be out. I don't like trading these international ETFs. And I think just about every chart I look at suggests the U.S. economy is stronger than many of the other areas of the world. And so that tells me that our index is probably going to outperform. It has been for the last year or two. And I think that continues. And with the stronger dollar, I don't know. It's not my cup of tea, but I would just watch that 20-day moving average.
All righty. Our only real estate request, Blackstone Mortgage Trust, and that would be BXMT.
All right, BXMT, well, you can see the failure. Once again, hopefully everyone's kind of getting a taste for this as we go over a lot of these charts. But anytime I get a stock like this where I break out and I trade over 34, which clearly I didn't back in September, and then I reverse and come back down, that to me is a sell sign as a short-term trader. Now, if you're long-term, I'm not trying to tell you to make a long-term decision based on one candlestick for a day, but short-term, that to me is a sign to get out and take my profits. It did come down after that. It had a rough day on Friday. It's trying to bounce back. I just think it's between this trading range right here, 32.25, 33.75, 33.80. Maybe even lift this one up just a little bit to the top of that black candle. So right there, this is the trading range I would play right now for BXMT.
All right, that concludes the 10 and 10. And here are the symbols that we just went over. I will have those up in the Market Watchers Live chart list. You can get to that. Just go to our blogs tab on stockcharts.com, click on the Market Watchers Live blog, and the link will be right there at the top for that chart list. All right, time for our final market update. And it's a pretty interesting one, I would have to say. All right, let's update this and make sure it's completely updated. And here we go. We did have that great open. We were heading higher, and then it's the air went out of the balloon, and we've been falling toward Friday's close. We're still in positive territory for the Dow and the S&P 500. The only one still, it is now trading in the positive area, but the NASDAQ did fall below Friday's close and has traded in the negative over lunch, but looks like it may try and come back and hit positive territory there. Mid caps, S&P 400 and 600, similar situation, pulled back, but they're still a fairly nice range above their closes from Friday. It does look like they're starting to consolidate sideways. TSX is mostly unchanged right now, but it also opened higher and has been falling throughout the day. Treasury yields are up slightly, 3.104%. UUP, big gap up. Then it had a pullback, and now it's heading right back up to test the intraday highs. Gold, a gap down and did consolidation. But now over the last hour, it is starting to really fall a lot faster. Currently, GLD is reading at 115.91. TLT, as you can see, is lower on the day. It did try to make a comeback and took back about half of the losses from earlier in the day, but still in the negative, consolidating sideways. TLT is reading 114.54 currently. USO is down slightly, 0.5%. I guess it's not slightly. It's now reading at 14.25. I'll be talking about USO more during the Decision Point report. But that's it for the market update. I'm going to pass back to you, Tom.
All right, sounds good. I'm just going to take a quick look at the chart that I put in my blog this morning. And the title of my blog was something about, the NASDAQ volatility measure could be suggesting a bottom for the market. And so what I referred to was, you can see on this chart, this is the NASDAQ volatility, the VXN, and I've talked about this quite a bit recently. But when we start getting into the 30s, 30, 35 on the VXN, you will see that these red arrows mark those trips up into the 30s on the VXN, and you can see what happens to the NASDAQ 100 when the VXN reaches this level. Now, the VXN can continue to get even more panicked. I'm not saying, this is definitely not any kind of a guarantee, but history tells me that when the market starts getting this fearful and we start seeing these kinds of readings on the volatility index, we should begin looking for a bottom. So as a trader who sat on the sidelines for a little bit, I actually started buying on Friday. I'm going to plan to add later today. I'm going to see how the market finishes today. But I think we're either at or very close to a bottom. But I would keep my stops in play. Definitely keep my stops in play in case we start to break down again, because with a volatility index as high as it is, we know how fast the market can sell off. So you do have to be somewhat nimble if you're trying to time market bottom. But anyhow, that's what I had for the for this market update.
All right, excellent. Let's go ahead then and move on into the Decision Point report. Lots of interesting charts to show you, of course. All right, so this is the Decision Point report for the week October 29th. And let's see what's been going on. I'm going to go ahead and cover the weekly and daily charts for the large cap, mid and small cap indexes, and then we'll look at the big four: dollar, gold, oil, and bonds. So that'll finish up. I also am going to show you our Decision Point indicators, and I am including the ultra short-term indicators today. That's not in here, but I will show you those as well. I thought some interesting information with breadth. All right, Decision Point scoreboards, what happened last week. I logged the Dow Jones intermediate term PMO sell signal. I logged it in on Monday, but it occurred on Friday. And then we also saw the Dow switch to an intermediate term trend model neutral signal. So, we had been waiting for the Dow because the Dow had been showing the strength, and last week, all of those buy signals finally disappeared. And as you can see, the only thing green at this point is in the longer term. And, those are not really, well, I'll be showing you the monthly charts on Thursday. So you want to definitely tune in on Thursday for that on November 1st. And I will be going over those long-term charts, but we're not that close to those sell signals on the longer term monthly charts. And I'll be showing you the daily chart, which has the 50 and 200-day EMAs. And that is how we get that long-term trend model signal. And the 50s are still pretty far above the 200-day EMAs. I mean, take a look here. We're looking at the S&P 500, the daily chart, and you can see that the 50-day EMA still there's a lot of margin here before we would see a long-term trend model sell signal. So I'm not of the mind that we're gonna see that. If we did start to get close enough though, and we could get very close, if we don't get price back up above that 200-day EMA, I mean, we could see that 50 travel down to the 200-day. I think that would really signal, in my opinion, the bull market's end if we end up with a 50, 200-day negative crossover. But I just don't see it. We have a lot of margin here that would need to be covered up. And I think price, if we get any kind of bounce, should get back up above that 200-day EMA. I think the only positive really at this point is that we did bounce, obviously, on Friday. It was nice to see a little bit of a bounce there, even though we were down on the day, but we didn't close at the lows for the day. And that has held up on, that has held some support. I mean, this is the big area, I would say, at 2,600. And, we managed to hold that and make the bounce back up today. That has gotten the PMO to decelerate, but we're still looking at readings on the PMO that we have not seen this whole year as far as the S&P 500 is concerned. The reading is at 1.64. Typically, we get a PMO range of -2 to +2 for the PMO. So we are in oversold territory, but honestly, we could see the PMO move lower before it does turn to the upside. And look at this OBV. I mean, what I noted when I looked at this chart was the difference between the drop we had, the correction last time, and what happened with the OBV versus what's happened since the top here with the OBV. And that to me signals some serious problems, more so than what we saw back here in early 2018, just because the volume really didn't kick in to the degree, over time. You could just see the red here since the top. Lots of negative volume, and we didn't really see that on the last correction. So that does have me a little bit concerned, but it also means we could be getting, seeing some oversold pricing here. And, Tom has talked about this might be a short-term bottom. I think that it's certainly, you can make a case for that, at least right now in the very short term. S&P 500 weekly, again, you can see that 2,600 level is holding. I think that was positive for the week, even though we had a very difficult negative week last week. We are looking at that PMO sell signal on the weekly chart, and the PMO is now reaching levels we have not seen since 2016. So near term, it is certainly oversold, but there is lots of room, obviously, for it to move lower toward the zero line. So I think that we could still accommodate more downside. The Dow, this is similar looks. We're getting these, we got breaks below the longer term rising bottoms trend lines here. And today, I think, though, very encouraging. We've managed to get right back up above it, to hold up, get that longer term trend, rising trend to hold, which I would say at this point, if we can stay above, obviously, close maybe even above that 200-day EMA for the Dow, I think that would be a really good sign that we could be looking at a short-term bottom here. You can see a deceleration in the PMO also on the Dow. Weekly chart, similar situation. We are still holding a very long-term rising trend. That would be, in my opinion, that's the secular bull market. We're looking at a nice long-term range here. We're looking at a correction, possibly the end of the cyclical bull market move. We could see some, we could see the breakdown here. We got a IT PMO sell signal sitting right there on the weekly chart. They're certainly possible, but if we are going to make that bottom, this is the place to do that. NASDAQ 100, obviously relatively having some serious issues in comparison to the other large cap indexes, but we're seeing a bit of a rebound again off of some support levels here from April, May is what I'm looking at, not super strong or important support, I would say. But the main thing is we are holding, we are moving back up. Like to see us get above the 200-day EMA so that we don't have to worry about this 50 crossing below the 200. But as I said, lots of margin there. Last week, we did close below this long-term rising trend. I've got this very wide rising trend channel. We did close below it. And that was cause for concern. I know I was very concerned about what we were going to see Monday on the open for the NASDAQ. And, we did get the higher prices, but we are starting to pull back now. You saw that on our market update. All right, OEX, I'm going to go through these quickly, not much different from the other charts. Just pointing out decelerating PMOs here. On the weekly chart, still holding up on that long-term rising trend. But as you can see with the NASDAQ, like the NASDAQ, we did penetrate that rising bottoms trend line. And, that had me very concerned. But right now, so far, we're trading above it for the week. But of course, this is just one day. S&P 400 and the Russell 2000, what I really want to hammer home for you is the fact that we are seeing very thin margins now. We're getting very thin margins between the 50 and 200-day EMAs on the S&P 400, and you'll see also on the Russell 2000. That would mean, again, the long-term trend model sell signal. That, to me, is your sign that at least a cyclical bull market is done with, and you would expect lower prices at that point. But we are holding support from the February lows, but that's what I would be watching out for, is the 5,200-day EMAs. And you could see the support was held, fairly strong support, about 175 here for IJH, the S&P 400 ETF, and I think that's positive. Again, 5,200-day EMA on the daily chart for the Russell 2000, pretty ugly here, getting very close to those downside crossovers. Like I said, this is the point. If we're going to get the bounce, we need to see it now. You do have a PMO that is trying to turn back up, but we saw a similar situation back here off of the bounce back, rally, the throwback. So we'll have to see if this is the same sort of deal. IWM's weekly chart, again, holding that area of support at those 2018 lows from February. All right, let's look at some indicator charts. Really what I wanted to point out, this is our ultra short-term indicators. So this is really a chart for the next couple days, maybe into the end of the week. But what I really wanted to point out is the climactic readings we're getting on the new lows right now on the S&P. And, typically when you get these climactic readings like this, you're going to look for either an exhaustion or an initiation. And in my opinion, we're in exhaustion territory here. The only thing that is preventing me from really getting too excited about this being like the final bounce is the fact that we are still really low on the Bollinger Band there on the VIX. We haven't actually penetrated it. I mean, you can see in the thumbnail, we kind of barely did right back here last week, but I'd want to see a penetration to the downside in a more major way before I would look for something that will sustain. Of course, it didn't sustain last time, but look, we didn't have the same sort of readings also on new lows. We have some really extreme readings right now. Short-term indicators, what I'm watching on both the short-term and the intermediate-term indicators are negative divergences that have shaped up. Typically, when we get those and we don't get them that much, we end up seeing a pretty sizable decline, over time. And, I was feeling pretty good. They turned up, last week, but they started to turn back down on Friday. So, you know, they are in oversold territory. But again, we've seen even lower readings back from the previous correction earlier this year. So I think there's still more downside that can be absorbed. And, you know, we're hitting some interesting resistance levels, I think, right now with the low we had back in October earlier. Intermediate term indicators, also again, looking at those negative divergences between the volume indicator and the breadth indicator. If volume is not supporting the same way as your breadth is, that is a sign there's some serious trouble. And that's what lined up for us in early September, the end of August. And it's been lower, moving lower ever since, as well as price. And again, you can see where it lined up. After that negative divergence, we still saw some upside, but it definitely, you know, we got that correction that came in after the second top that we got. All right, let's get into the big four real quick here. And we have the dollar to start. I'm bullish on the dollar. I'll go back here. I'm not done with that. Nice little breakout. We're holding it so far today over that August top here on UUP. The PMO bottomed above the signal line, and it's certainly not overbought. I still think the dollar can move higher. And right now, I would be looking toward that 25.75 area, 25.80. Let's get it up above that level, which would line up with the 2010 top that we had. So that's what I'm looking for as the next area of overhead resistance. Also kind of lines up here with these two lows that we saw at the end of 2016 as well. So that's what I'm looking for. We got the bottom above the signal line. I would look for that breakout. Gold, I'm also bullish on. And again, everybody's, how can you be bullish on both the dollar and gold? This is why. They're decoupling, meaning the correlation is not as strong to the reverse side. Typically, they run exactly opposite of each other, with that reverse correlation being almost -1 all of the time, almost all of the time in the longer term. This is the 50-day average. This is the 20-day average correlation. Now you're seeing both. In fact, this one we have not even seen in positive territory for a year as far as the correlation between gold and the dollar. So I am bullish on both. I think we continue to see this problems with the market. We're going to see gold move higher. I think the level I'd be looking toward is 1280 right now. We need to get that breakout, though, to hold and close above 1240. And so far, not seeing it. And I do believe GLD, like we did show, is lower on the day. So we're not going to see that breakout today. Long term, we got the breakout from that declining tops trend line. I think that's a positive. And look at the PMO. We're just about ready to have a buy signal on the PMO, and we're still seeing rather high discounts on the Sprott Physical Gold Trust. So that means bearish sentiment, and that is sentiment being contrarian, that's bullish for gold. So I think gold still looks pretty good. I'll have to see if it can get that breakout, though. All right, USO and oil. We have an intermediate term trend model neutral signal that will go into effect at the end of the day. Oil is just not really performing well. We are hitting some interesting, I guess you could say, support, this rising trend, rising bottoms trend. We're holding that rising trend, but I suspect we're going to lose it, and we're going to end up testing these August lows. At this point, we still have room to move lower. The PMO is starting to decelerate, and it is oversold, so we're getting close to a bottom. I'm thinking we're not going to see that until at least the 200-day EMA is fully tested, or that 1350 level. As far as the weekly chart goes, you can see where we're trading right now this week, and you can see where we finished last week. We finished within that rising trend channel. We did finish within it, but we penetrated below it. And this week so far, we are trading below it. You can see that the PMO is on a sell signal and is now accelerating lower for oil. So I do see lower prices at this point. I will reevaluate at the end of next week when I see what kind of a breakdown from this rising trend channel we've gotten to determine how bearish I really want to get at this point. But I am looking for lower prices on oil. Bonds, our final one, we have a PMO buy signal. We have a scooter that is improving. We see the OBV is starting to try and make the turn here on TLT. And now we have a rising, an ascending triangle, which is a bullish formation, and we should expect an upside breakout from that. So, I'm not really bullish on bonds, but I would have to say in the short term that we probably are going to see a little bit of a rally here. And if the market's soft, that would make a little bit of sense there to get a little bit of more action on TLT. So I am looking for the breakout, but you can see very strong resistance at 116. I'm not sure how much past it that will go. And part of the reason is I'm looking at this head and shoulders on TLT on the weekly chart. I think it's pretty ugly. We've got the sell signal. And then look at the monthly chart, pretty darn ugly on bonds. This is the bonds, and you've got the same head and shoulders set up here, and it's continuing lower after executing. And the measurement would put it down to 115 for bonds at that top we saw back in 98. And lows from back here in 2009, 2010. So I am looking overall in the longer term for lower prices on bonds. And here is the summary. I will give you very quickly here. So large caps, the long-term rising trend's holding. And the mid caps, small caps, I'm worried about that long-term trend model sell. Those 50 and 200-day EMAs are getting really close to each other. Short-term indicators, there's those negative divergences, as well as on the intermediate term indicators. All are nearing extremes, though, as far as oversold. They're nearing it. So we are setting up for a possible bounce here in the closer term here, in the near term. Dollar, I am bullish. Gold, I am also bullish. All of these summary slides I will have up in today's Market Watchers live recap for October 29th. So you can go and read these a little more closely. But rather than read them, I'm just giving you my overall opinion. As far as oil, I am still, I'm feeling a bearish on that one at this point. It is holding that long-term rising trend, but barely. I'm expecting lower prices down to the support levels I showed you earlier. And bonds, I am bearish on, but I think in the short term, I have to be a little bit more bullish just because of the chart formation and the buy signal. And that's it. Ooh.
All right, take a break. I do want to mention, we haven't really talked about it today, but many of the marijuana stocks really getting hit hard to the downside. The Horizons Medical Marijuana Life Sciences ETF, the HMMJ.TO, is down more than 7%. And the individual names I know a lot of you follow, Tilray, down more than 10.5% right now. It is down below 100, which it hasn't seen in probably about 6 weeks. Canopy Growth, CGC, also down 11%. And NBEV, New Age Beverages Corp, NBEV, down more than 5.5%. So anyway, just wanted to point that out.
Not smoking.
No, they are not smoking. They're smoking in the wrong direction. But there's our upcoming schedule. Obviously, we got some big shows coming up, so we certainly hope you can join us. I want to thank all of you for being with us today. Please remember to complete the survey as you exit. Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Monday afternoon, everybody, and hopefully we'll see you back here tomorrow. Happy trading.